Yes, friends. Having covered many concepts under the head salary income, having understood what is salary, how employer-employee relationship is important, and what are the components of the salary, and having understood what is the definition provided under Section 17, salary and other components like pension, gratuity, profit in lieu of salary, all these things we have understood. Now it is time to learn about allowances. So various kinds of allowances are received by the employee. These are the allowances which are paid by employer. Let us understand what are they. And to start with, let us understand this basic thing, that some of the allowances may be totally exempt, that is not taxable at all. There might be some allowances which is fully taxable, and there might be some allowances which are partly exempt and partly exempt. Or there might be also some allowances which are exempted but subject to fulfillment of certain conditions. So all these things we need to discuss. So let me share the screen with you right now. And the concept is allowances. So when you talk about allowances, what we understand, it is the amount received from employer regularly to meet a particular requirement. And in fact, it's a part of salary. For example, particular requirement means, suppose you are traveling or employee is traveling. So employer may give the allowance called as traveling allowance. Okay. And this allowance is a fixed quantum of money. That means irrespective of your actual expenditure, these allowances are given. For example, let us say traveling allowances are given at the rate of 10 rupees per kilometer. So it is a fixed amount. So irrespective of the fact that whether you are traveling by scooter or you are traveling by car or taking a taxi, it doesn't matter. Traveling allowances is 10 rupees per kilometer. It's not traveling reimbursement. Reimbursements are different. Allowances are different. Reimbursements are made on actual basis, depending upon the internal rules of the employer. But when you are talking about allowance, we are talking about the fixed allowance. Suppose dress allowance is given to employees, 5,000 rupees. Whether employee is spending 5,000 rupees or employee is spending 8,000 rupees, that doesn't matter. Allowance is a fixed payment. It's a fixed quantum of money. And if you refer to Section 15, allowances are taxable, excluding few, where they're entitled of certain deductions or exemptions subject to fulfillment of certain conditions. Did you understand the meaning of allowance?
Yes, sir.
Will you be able to distinguish now whether it is actually an allowance or reimbursement? Will you be able to distinguish?
Yes, sir. I'll try.
When you talk about reimbursement, it depends upon the actual expenditure. When you talk about allowances, it is fixed. So many times, many people get confused with these two things. And specifically with some allowances like medical allowances versus medical reimbursement. They are two different things. So you'll be understanding all these four things. So one by one, let us discuss. Now, if you look at this table, you can find 3 columns are there. So what is the title or the heading of the first column?
Fully taxable.
So the allowances, what you are seeing underneath, you can find these are the fully taxable allowances. I request any one of you, please read them 1 to 30. Please read all these allowances one by one. We'll be discussing them, then we'll move ahead. These are fully taxable. What is number 1?
Dearness allowance.
Dearness allowances are given. This is an allowance which is popularly called as DA. Of course, there is one more allowance which is called as the daily allowance. Friends, daily allowances are different from dearness allowance. Okay, the dearness allowances are paid to the employee in order to enable him or her to meet the increased cost of living, since prices of goods and services rises over time. So some additional allowances are given, or some additional income is given to the employee. So normally DA is calculated as a percentage of basic salary. Okay, so treatment is that DA is fully taxable. Next, what is that?
Entertainment allowance.
Entertainment allowance. It is fully taxable. Okay, one kind of entertainment allowances is exempted to a certain amount. We'll be learning that thing towards the last part of our this thing. So, as you are aware of that, under section 16, 3 deductions are available. One is standard deduction, second is entertainment allowance, third is professional tax or tax on employment. At that time, we'll be understanding in which situation entertainment allowance is allowed for deduction. Otherwise, entertainment allowance is fully taxable. Point 3.
Overtime allowance.
If employee works overtime, if allowance is paid, that is fully taxable. It will be just included in salary. 4.
Fixed medical allowance.
Yes. Medical allowance is fully taxable. I repeat, allowances are normally fixed, but it is only for your explanation. I have written it like this: fixed medical allowance. It is different from medical reimbursement. Okay, whether medical reimbursement is taxable or tax-free, or to what extent it is taxable, we have not yet learned. We'll be learning in appropriate time. But fixed medical allowances. That means if this kind of money is given irrespective of actual expenditure, and if it really takes the shape of allowances, then it is fully taxable. Okay, then
50 compensatory allowance to meet increased cost.
compensatory allowances. Okay, to meet the increased cost of living in cities, if these allowances are paid, that is fully taxable. Interim allowance. That means before finalizing some allowances, if some interim allowance is paid, that is fully taxable. Servant allowance. That means if employee has to keep some servant, and some allowances are given to the employee so that in that money he can maintain a servant, that allows. Project allowance. His employee is working in some project site and he's given some project allowance. All these 3 allowances I told are fully taxable. And similarly, tiffin allowance, lunch allowance, dinner allowances. Mind you, these are allowances. This is not reimbursement, or these are not the expenditure incurred by the employer for tiffin, lunch, or dinner. That treatment, reimbursement treatment, will be learning separately. But if a fixed sum of money is paid as tiffin allowance, lunch allowance, dinner allowance, all these allowances are fully taxable. If some other cash allowances are given a different name, they are also fully taxable. Warden allowance, proctor allowance, these are certain allowances of which are normally given to some employees of educational institutions, where they may keep hostel warden, hostel proctor, etc. So these allowances are fully taxable. Non-practicing allowances are normally given to the doctors in order to bring a prohibition on private practice. People who are working or employed in a particular place, in order to discourage them to go for private practice, these non-practicing allowances are given. They are fully taxable. Similarly, transport allowance to employees. If certain transport allowances are given to employees for coming from his home to office and again going back from office to home. So home, office, home. For this type of transportation, if some allowances are given, that is fully taxable, except, as you can read, other than blind, deaf, and dumb, orthopedically handicapped employees. For them, there is one exemption up to 3,200 rupees per month, etc. We will be seeing that in appropriate time. But otherwise, transport allowance is fully taxable. Now come to the second column. Can you read The heading of the second column.
Partly taxable.
So these are some allowances which are not fully taxable, but taxable in part. Partly it is taxable. So you can see first is, what is first one?
House rent allowance.
Popularly, this is called as HRA. House rent allowances are partly taxable, but how to calculate that exempt part we'll be learning. Then there is a list of allowances which we call it as special allowances. We'll be saying which are covered under section 10, 14. So section 10, 14 includes a list of allowances which are special allowances. They are exempted, but in part, partly taxable, partly exempt. Okay. Now come to the third column. Now you see what is the heading?
Fully exempt.
Yes, fully exempt. Now please read the list. What are the allowances covered here?
Allowances to High Court judges. Allowances paid by the United Nations Organization.
Okay.
Compensatory allowance received by a judge.
Yes.
Sumptuary allowance granted to High Court or Supreme Court judges.
Okay.
Allowances granted to government and employees outside India.
So these allowances are fully exempt. All allowances to High Court judges. And if there is some allowances paid by United Nations organizations, then allowances received by a judge, compensatory allowances by a judge, sumptuary allowances given to High Court or Supreme Court judges. Sumptuary allowances means these judges, there is some restriction on spending money on some items like dresses or personal expenditures. So they are giving some allowances to compensate for that thing that is called as sumptuary allowances. So, and again, allowances granted to government employees who are working outside India. So Indian government employee who is working outside India, his salary is taxable, but his allowances are fully exempt. Okay, this last point, we had also discussed it earlier. But now, did you understand? You got some idea that there are some allowances which are fully taxable, there are some allowances which are partly taxable, and there are some allowances which are fully exempt. Okay. Now let us quickly discuss all of them one by one. So if I show you the list of fully taxable allowances, you can just have a glance right now. Just have a look that these are the things which are fully taxable. Are you watching it?
Yes, sir.
Yes, sir.
Yeah. So you see under transport allowances, I have put an asterisk mark purposefully because transport allowance is fully taxable, but for differently abled employees, there is an exemption. Okay, so we'll be learning that thing in appropriate time. Exemption is there, but it's only for those employees who are differently able. Okay.
Yes,
Now,
sir.
first, one by one, let us see. Few allowances. Non-practicing allowance. Why it is given? To compensate for restriction on private practice. So what is the treatment in tax? Non-practicing allowance. Let us say a doctor, we give it. It is fully taxed. We give this allowance to a doctor so that he will not go do any private practice while he is unemployed. Okay, let us say a doctor is employed in the company and we want to restrict him not to do any private practice. So one non-practicing allowances may be given to them to encourage this kind of thing. And that will be fully taxed. That non-practicing allowance is just like a salary component. Now, which allowance now you are saying?
Warden or proctor allowance.
Yes, this hostel warden allowance, proctor of the institute, that allowance. These allowances are also, you can see, it is fully taxable. Here, I am showing you again a list of allowances, as you can understand by seeing the table. It says all these allowances, what I'm showing, are fully taxable. Okay. First, deputation allowance. This is given to the employees when they are sent on deputation. That means they're deputed to a different employer. This allowance is fully taxable. City compensatory allowance. We have discussed it earlier. This allowance is given to employees to meet the personal expenditure or extra expenditure by reason of posting in a particular place or in a particular city. Suppose a particular city is very costly and an employee is transferred there, he may be given an extra allowance called a city compensatory allowance. This allowance is fully taxable. Tiffin allowance is given to meet the cost of refreshment or to meet the cost of tiffin, and it is fully taxable. Medical allowance. I repeat, here we are talking about allowance. Medical allowance to meet the cost of medical treatment is fully taxable. Right? Servant allowance to meet the servant expenditure hired for personal use is fully taxable. Is it clear to you?
Yes, sir.
Now, few other allowances, let us see. Dearness allowance or DA. As you know, as you have discussed already, this is also fully taxable. Here, one thing you have to keep in mind that sometimes this DA may form a part of retirement benefit and sometimes it may not. So irrespective of that, whether DA forms a part of retirement benefit or it doesn't form a part of retirement benefit, doesn't matter. It is always fully taxable. When I say it forms a part of retirement benefit, what exactly I mean is that it is taken for computation of retirement benefits like gratuity, pension. If it is considered for computation of retirement benefit, you can say this forms a part of retirement benefit. Is it clear to you?
Yes, sir.
Well, friends. Now, let us see some allowances which are not fully taxable. So allowances to meet for certain personal expenditures and special allowances which I had spoken earlier, which are covered under section 10.1. We'll be seeing that. So these are the allowances which are not fully taxable. Fully taxable allowances we covered just now, right? Now we are learning not fully taxable allowances. Okay, friends?
Yes, sir.
Okay. Now have a look at the list of special allowances. Section 10.14 includes some special allowances. Just first have a look. We'll be seeing how they are partly exempted. We'll be learning that thing. Got some idea what are these allowances? Children education, tribal area, hostel expenditure, remote area, compensatory field area allowance, then counterinsurgency allowance, border area allowance, hilly area allowance. These are the special allowances we're talking about. Okay. Now, first,
Sir, what is compensatory field area?
An employee is posted in a field, and that means he's not working in the office and he's posted in a field. Therefore, in order to compensate him, this field area allowances are given to him. Okay. Now,
Yes, sir.
Now, this is a very important allowance. Most of the salaries employees, they get this allowance. This is covered under section 10.13a. This is house rent allowance or HRA. Okay. So salaried employees always discuss how much is exempt out of this. So this amount is paid by employer to meet expenses in connection with the rent of the house. If employee is staying in a rented house and paying the rent of that, then he's and also he's receiving house rent allowance, then certain exemptions will be allowed. This HRA is taxable, but there are some exemptions. So it forms a part of taxable income. It will be included there. Exemptions are allowed, but no exemptions will be given if, number one, he is living in his own house. If he's living in his own house, that means definitely he is not paying rent. Or he's staying in a house where he's not paying rent. Let us say he's staying in some relative's house. He's staying in a house which owned by his spouse or relative. But I will be learning subsequently, there is no restriction as regards to paying rent to spouse or paying rent to any relative. But if rent is not paid, then no exemption. If someone wants to claim exemption, then he has to pay rent. Is it clear to you?
Yes, sir.
Rent needs to be paid. An employee should not be staying in his own house. So this condition needs to be complied with. Okay, friends?
Yes, sir.
Okay. Now, you need to remember these two conditions. Now, friends, what is exemption or how much exemption is allowed? As you can see here, with respect to HRA, the least of the following three things are exempt. Okay, least of the following three things. That means minimum of these things is exempt. What is number one? Please read it out.
Actual house rent allowance received.
So whatever HRA is received, first take that figure. Let us say employee has received HRA of 10,000 per month. That means annually he is receiving 1,20,000. That is the actual HRA. So take that thing, that is the first limit. Point two.
Rent paid over 10% of salary.
So here you have to calculate how much excess rent is paid over 10% of the salary. First, we need to calculate what is the salary. Then we'll find out what is 10% of that. If employees is paying within that, then no issue, then zero. Otherwise, we'll see if the rent paid is over 10% of the salary, we'll take that figure. Did you understand? The rent paid over 10% of salary.
Yes, sir.
Okay. Just a minute, friends. And friends, here, the meaning of salary is slight. We need to understand the meaning of salary. Therefore, I have put a asterisk mark. Okay, did you understand this point? Rent paid over 10% of salary. So what is salary under this for the purpose of house rent allowance? So we'll be learning. And let us come to the third limit. What is the third limit? Please read it.
50% of salary if house is located at metro, or 40% of the salary if located in any other places for
Here,
the relevant
yeah, further, please read it.
for the relevant period during which house rent allowance is provided.
Now, third point is that either 50% of the salary or 40% of the salary. It depends where the house is located. Suppose employee is residing in a house located at the city Bhubaneswar. Tell me how much he should take, 40% or 50%? In third limit.
50%.
50%. But what you rate that 50% of the salary if the house is located in a metro. Metro here means metro city. Is Bhubaneswar a metro city?
No,
No,
sir.
sir.
No. Then how much you should take?
40%.
40%. So 50% will take only when the house is located at Delhi, Kolkata, Chennai, and Mumbai. Okay. Otherwise, it is how much? 40%. Okay. And this 40%, 50% of the salary has to be taken for the relevant period during which HRA is provided. Okay. Let us say employee has received HRA from the month January or March. Then he has received salary, received HRA for 3 months, Jan, Feb, and March. Is it not? So you have to take salary for those 3 months. And those 3 months salary is 40%, 50%, as the case may be, will be taken. Did you understand? Third point.
Yes, sir.
So 3 points are there. One is actual HRA received. Then rent received over 10% of salary. Next is 50% of the salary if the house is located in a metro, or 40% of the salary if the house is located in a non-metro. And we have to take the salary for the relevant period during which HRA is received. Well, friends, now, what is the meaning of salary here? Salary means, as you know, we need to calculate 10% of the salary, 50% of the salary, or 40% of the salary. But here, so far as HRA is concerned, the salary means, number one, basic salary plus DA for being a part of retirement benefit plus commission as a fixed percentage of turnover. If the commission is fixed as a percentage of turnover, then only that commission will be included, otherwise not. Understood the meaning of salary? Basic plus DA. DA will be included only when it forms a part of retirement benefit. In case DA does not form a part of retirement benefit, that DA will not be included in salary for the purpose of calculation of HRA. It will be included in the salary because DA is anyway taxable. But for the purpose of computation of HRA exemption, this will not be included. Are you getting?
Yes, sir.
Okay, that was point number one. Now come to point number two. This 50% or 40% that I told you earlier, it depends upon the place of accommodation. That means where the house is located, not the place of employment. There is a possibility that house might be located in a non-metro, but the place of employment may be in metro. Is it not? Okay,
Yes.
that possibility is there. If that is so, if let us say house is located in a non-metro, employee staying at the outskirts of the metro city. House is located in non-metro, but employee is daily traveling to the metro city. So since the place of accommodation is a non-metro place, then not 50%, then 40% will be allowed. Point 3. One of the conditions is that rent should be paid. Okay, and if the rent is not paid, then no exemption under HRA. But there is no restriction that rent cannot be paid to the relative. Rent cannot be paid to self, but it can be paid to the relative. Meaning husband can pay rent to wife, wife can also pay rent to the husband, if I take an extreme situation. House may be owned in the name of spouse and rent may be paid to spouse. There is no such restriction. Are you getting? So rent to relatives is eligible for deduction. Okay.
Yes. Yes, sir.
Next one. Salary to be computed on due basis. Meaning, let us say employee has received some advance salary. So instead of 12 months, he has received salary for 42 months extra advance salary. That advance salary is taxable, that's a different thing. But for the computation of exemption of HRA, This advance salary will not be taken into account. Salary for the relevant period will be taken into account on due basis. Is it clear to you?
Yes, sir.
And one more condition. Expenditure must be incurred. Okay. The employer may insist rent receipt for TDS purpose. The TDS provision says that in certain incomes, employers are supposed to deduct tax at source. Certain payers need to deduct. So since employer is paying income to the employee, he might have to deduct tax at source, subject to some conditions. And at that time, employee might be claiming exemption under HRA. So at that point of time, employer may insist for rent receipt. Employer may say, okay, this HRA exemption will be given to you, but you show me the rent receipt. Otherwise, how can he know that rent is actually paid? So employer may insist on rent receipt. Understood?
Yes, sir.
Okay. Now friends, we'll do one thing. We'll take an example how HRA will be computed. And but before that, I would like to take you to the income tax department to show you the tax calculator. Or we'll do one thing. Let us do the example first. Yes, I'm sharing the example now. So I think you are seeing an Excel file. And you have to answer me this. Take a piece of paper and pen. Try to solve it. The question is that basic salary per annum, 3 lakh rupees. DA, which forms a part of retirement benefit, 80%. So when it forms a part of retirement benefit, whether it will be included with the salary for the computation of HRA benefits, it will be included. The commission fixed per month, 5,000. That is a fixed commission. Whether it should be included.
Yes, sir.
You feel it is this, but what I had taught you, commission fixed as a percentage of turnover. Is it fixed as a percentage of turnover? It's a fixed commission. Are you getting me?
Yes, sir.
Now tell me whether it will be included or not.
Yes, sir.
It will be included?
Yes, sir. It is fixed. So
No, it is fixed. You try to understand the provisions. It is fixed when it is fixed as a percentage of turnover. That means it is related to turnover. Then only it is to be included. But here it is a fixed commission.
then excluded.
Yes, that you should have said. It should not be. Then HRA per month. Salary was given to you per annum. But HRA per month is how much?
6,000.
The rent paid to his wife for month. Whether rent can be paid to wife, is it acceptable?
Yes, sir.
Okay. Then place of stay is Navi Mumbai. So 40% or 50% what you are going to take?
40%.
Yes, okay. Place of employment is Mumbai. So employment is in a metro city and this thing. Stay is in a non-metro place. Employee has taken 2 months salary in advance. 50,000 he has taken. So this advance salary will be included for computation of salary or not? What do you say? She has taken 2 months salary in advance. So as we have discussed earlier, advance salary will not be taken. Only salary for the relevant period will be taken. An employee becomes eligible for HRA and receives it from the month of June. That means when the financial year starts from April. So April, May, he has not received HRA. So his HRA receipt is for 10 months and per month it is 5,000. Understood?
Yes, sir.
Now try to solve it. I'll be helping you. Try to solve it, arrive at the answer. Well, friends, some of you have calculated. So let me show you the answer. Those who have already done it, you can see. Basic salary is 3 lakh. DA is 80% of that. You have computed it 2,40,000.
Yes, sir.
Okay. And commission is 60,000. Commission is taxable. Okay. Only thing is that for purpose of salary, it will be taken or not. That was the question. Commission is taxable. So basic salaries you have taken, DA you have taken, commission will be including. Right. Now, next question is how much of HRA will be taxable? For that thing, we need to know what is the salary for the purpose of HRA. For the purpose of HRA salary is 2,50,000. Why 2,50,000? You have seen that what is his annual salary? 3 lakh rupees. But he has received HRA for 10 months. Is it not?
Yes, sir.
So the relevant salary for the relevant period is not 3 lakh, but how much? 2,50,000. Did you understand?
Sir, if 60,000 is deducted from 3 lakhs, then 2,40,000.
What is 60,000?
So the HRA that he has been receiving since June for 10 months. So.
Okay, HRA he is receiving in addition. Basic salary this much, HRA he is receiving in addition. Okay, so this basic salary is 3 lakh for 12 months. So for 10 months, basic salary is how much? 2,50,000. Okay.
Yes, sir. Yes, sir.
Right? On that, you have to calculate what is the DA. DA is 80% of that. So 80% comes to 2 lakh. And commission, I told you, it is a fixed commission. It is not a commission fixed as a percentage of turnover. It is a fixed commission. Okay. It's not a commission fixed as a percentage of turnover. Therefore, commission amount is nil. We are not taking for HRA computation. So total salary comes to 4,50,000. Is it okay?
Yes, sir.
Now, 10% of the salary comes to 45,000. And the question says actual rent paid is 7,000 per month. Okay, rent paid to his wife is 7,000 per month. So in this 10 months, totally how much paid? 70,000. Now, excess rent paid over 10% of the salary is 25,000. That is 70,000 minus 45,000. Okay.
So 70,000, like for 10 months, then, sir, I couldn't understand the excess of rent paid over 10% of salary.
So 10% of the salary you have understood 45,000.
Yes, sir.
And how much rent paid? 70,000. So how much excess paid?
25,000.
Yes, that is one. Excess paid over 10% of salary. So here is one limit is 25,000. That is the excess rent paid over 10% of salary. Another limit is 40% of the salary. 40% of salary means this salary we are talking.
So 40% of salary means the total per annum salary.
Or annual salary means salary for the purpose of HRA. That is 4,50,000. 40% of 4,50,000, it comes to 1,80,000. And what is the third limit? Third limit is actual HRA receipt. And how much is the actual HRA? So my point is that first actual amount is 60,000 he has received, 5,000. Now, what is HRA receipt? Question says HRA per month is 6,000. So 6 into 10 months. So it comes to 60,000. Rent paid over 10% of the salary is 25,000. 40% of the salary is 1,80,000. You have to take minimum of that thing. Minimum of these three things is 25,000. So 25,000 will be exempted. Actual HRA received was 60,000, of which 25,000 was exempted. So what is taxable is 35,000. Taxable HRA is 35,000. So my tax computation, income computation will be like this. Basic salary 3 lakh rupees. Normal basic salary is 3 lakh. For HRA purpose, we have taken it 2,50,000. DA is 2,40,000. Commission is a part of salary, it will be included. But for HRA, it will not be. Okay. HRA 60,000 was received, but 25,000 exempt, 35,000 is taxable. Advance salary is also taxable, so 50,000 is taxable. So total taxable salary comes to 6,85,000. Hope you have understood this.
Yes, sir.
Okay. So recorded videos will be made available to you. So you can once again watch and try to understand how it is computed. I repeat, this is the question. Okay. Salary for the relevant period has to be taken. And commission is to be taken only when it forms a part of, only when it is fixed as a percentage of turnover. For the purpose of computation of HRA, that is salary. And DA will be taken only when it forms a part of retirement benefit. Is it clear to you?
Yes, sir.
Yes, sir. Okay. You have understood it, right? So same thing I have presented here, you see. This is the exercise question. And this is how we have solved it. Okay. Now, friends, you can do one thing. Let me here take you to the Income Tax Department website to give you an exposure that how we can compute HR exemption by using calculators also. So I want to use calculator now. Now again, you have to guide me how to find it. Just a minute. I'm taking you to the home page of Income Tax Department and I'm looking for calculators. Where it is available, who can tell me? Can anyone tell me?
The tax tools में tax calculators and then
Okay, tax tools. So we'll go to tax tools and you can see various kinds of calculators are available here. And we are looking for HRA calculator. Can you see it here, HRA calculator? House rent allowance calculator. You
Yes,
see.
sir.
Okay, so let me open it for you. Now here you can use your calculator. Okay, you can think something. Let us say basic salary is 3 lakh, right? DA for being part of salary, let us say 2,80,000. Commission as percentage of turnover achieved by the employee. Let us say commission is nil, or you may put, if you want, you may put something. Okay, how much is HRA received? Let's just say HRA received 60,000. Let us say how much is rent paid? Let us say rent paid 90,000. Now the next question asks, please tick if he is residing in the metro city. Why this question is asked?
So then accordingly, they will take 50% or 40% of the
So
salary.
you just tick it. Let us say he is not staying in metro city, so I need not tick. Okay, understood. Now, if this is the data, then here you see this button is there to calculate. You can calculate here. If you calculate, you can find out system has computed the calculation. In this case, exempted house rent allowance is 32,000 and how much is taxable? 28,000. If this is the thing, you can calculate it. Let us tick it here. Let us say metro city. Is there any difference? Maybe if there is some difference, maybe some, may not be some difference also. Here also same thing, because minimum of these three is taken. And this 40%, 50% is not the minimum amount. Therefore, it is unaffected. So if this situation, whether he is staying in metro or is not staying in metro, doesn't matter. Exemption is 32,000. He has received HRA of 60,000. Therefore, taxable amount is 28,000. Is it clear to you?
Yes, sir.
Hope you can comfortably, you'll be able to use this calculator. Yes or no? Will you be able to use it?
Yes, sir.
Right, friends. Now let us move ahead. Now here we are reading, we'll go through certain allowances. So exemption depends on actual expenditure income. So these are the allowances. You see, travel allowance, transport allowance. It is different from transportation allowance. Okay, travel allowance, transport allowance, etc. These allowances are given to meet the cost of travel and tour or transport. So it may include some paid for transport, packing, transportation or personal effect also. That how much is exempted? Exempted is the minimum of actual amount received and actual expenditure income. That means if actual expenditure incurred is lower, then it will be taxable. Suppose allowances are given 10,000, but actual expenditure is 9,000. So minimum is exempt. So 9,000 is exempt, 1,000 will be taxable. Understood? We'll take the actual amount and compare it with the actual expenditure. If actual expenditure is higher, then no taxable. Okay, if actual expenditure is lower, the difference is taxable. Okay, if in a given question is silent that how much is the expenditure, then you can safely assume that the entire money has been spent.
Okay, sir.
Okay, this is about transfer. Similarly, daily allowance. Daily allowance is different from DA or dearness allowance. Dearness allowance is fully taxable. But daily allowances are given to meet the daily expenses, the cost of daily charges on account of absence from his normal place of duty. Let us say employee is going in a tour and he is giving a daily allowances of 100 rupees. okay, to meet his extra expenditure. So what is exempt is the actual allowance received or actual expenditure incurred, whichever is the minimum. So minimum of 1, 2 is exempt. 1 or 2, as you are seeing this slide, that is exempt. Understood this? Same
Yes,
thing.
sir.
If expenditure is actual expenditure is lower than the allowance, then the difference will be taxable. Third allowance is conveyance allowance. Here also, this is the allowance given for performance of duty, for conveyance in performance of the duty. In order to perform the duty, if some conveyance allowances are given, then it is taxable or it is exempted. A minimum of A, actual allowance received, B, actual expenditure income. So actual allowances and actual expenditure will be compared. If expenditure incurred is lower, that will be taxable. Here, when you say conveyance allowance, then allowances for residence to office and office to residence is not covered. Allowances to residence to office and office to residence is fully taxable. It is exempt only for those employees who are physically challenged.
Yes, sir.
And that too subject to a certain limit. We'll be learning it at appropriate time. Next allowance is assistant allowance or helper allowance. Here also situation is same. Exempted how much? Minimum of actual allowance received and actual expenditure income. Okay, here we are talking about assistance allowance or helper allowance. And this assistance allowance and helper allowance is different from servant allowance. Servant allowance is fully taxable. But assistance and helper allowance, that means when you are doing your official duty, you might be needing some help. The employer is giving an allowance for that. That is exempted if the actual expenditure is more than the allowance or it is equal to allowance. But it will be taxable if the actual expenditure is lower than that. Understood? Next
Yes,
is
sir.
professional development allowance, training allowance, research allowance, academic allowance. These kind of allowances are given for training or for academic development. Here also, situation is same. Amount exempted will be minimum of actual allowance received or actual expenditure incurred. So we have to see if the expenditure incurred is lower than allowance received, then that the differential will be taxable. Okay, friends. Now, next allowance is that uniform allowance. Uniform allowance is different from dress allowance. Dress allowance is fully taxable. Dress, you can wear any type of dress, but uniform means office uniform you have to wear. So most of the cases you can wear uniform only inside the office or when you are on duty. Uniform attendance or uniform allowance or maintenance of uniform allowance is exempted to the extent of minimum of actual allowance received or actual expenditure incurred. Okay, if the actual expenditure incurred is less, then the differentials will be taxable. Okay, so here, friends, we are learning those allowances where taxability depends upon the amount of expenditure you incur. Okay, having understood this, these are the allowances I told you. Right, what are they? One is travel allowance or transfer allowance. Second is daily allowance. Third is conveyance allowance. Fourth one is assistant or helper allowance. Fifth one is the professional development allowance, training allowance, research allowance, academic allowance. Then is uniform allowance or maintenance of uniform allowance. With this understanding, here is a question for you. Let us see this. Let us test that. You please tell me in this question. 11 situations are giving you at first instance. I will be also giving you some more instances after this slide. Now you have to tell me, you see, name of allowances are there in the second column. Just have a look. How much amount is received that is there in the third column, and amount spent is also there. You have to tell me how much is exempt, how much is taxable. All of you are ready?
Yes, sir.
Yes, sir.
Number one, see, travel allowance, amount received is 9,000, amount spent is 6,000. How much is exempt, how much is taxable? Or you first tell, yeah, you tell me first. How much is exempt?
6,000.
Okay. So all of you do one thing, take a piece of paper and write down your answer. How much is exempt, you just write down. Amount taxable is the difference. Amount received minus amount exempt is the amount taxable, isn't it? So just take maybe 1 or 2 minutes. Just write down your answers. Quickly. Let us see your answers. So you can find it out here. You have to find out whichever is lower. Okay, that is exempt. So if you compare here, you can find that here 6,000 is exempt, next case 7,000 is exempt, 3,500 is exempt. Okay, so like this, 1,800, whichever is lower, you can find out. That is exempt. Your answer is right after this,
Yes, sir.
All are correct.
or there is some mistake?
No, no, sir. All of them.
All are right. And what is taxable is the difference. Amount received minus amount exempt. If there is some money, there is taxable, otherwise it is not taxable. This part of your answer is right, or there is some mistake. Is there any mistake?
No, sir.
Okay. So you have understood this?
Yes, sir. But in second point, I have like 2 mistakes. But
Okay.
now I have.
Now you have understood where you have committed mistake.
So yes, sir. Sir, actually, I deducted the amount that is spent and received, but I have to keep in mind that the amount received that is completely spent, then it will be less.
Yeah, it will not be taxable. Right. Okay. So friends, now be ready. So I'm showing you one more question. And again, I'm giving you some time. Please complete it. Here is your question. Please complete it at the earliest. Well, friends, let us see your answer. So before seeing that thing, so let me tell you, as you are aware of, the dress allowance is different from uniform allowance. Servant allowance is different from helper allowance. Dareness allowance or DA is different from daily allowance. And most of the allowances, almost all the allowances I'm showing here, are fully taxable. So amount of exemption, if you see, there is no exemption. All of you have done it.
Yes, sir.
So the entire amount is taxable. Okay, friends.
Yes, sir.
Well, now, friends, now we'll go to the next part. So we have seen certain allowances which are fully taxable, certain allowances where taxability depends upon how much expenditure will incur. So few more allowances we're learning where allowances, in fact, doesn't depend upon the actual expenditure, but it depends upon some other conditions. We'll be seeing that thing like children education allowance, hostel allowance, etc. So few more allowances are there. So I feel it will take one more session to cover all these allowances. So maybe in the next session, we'll be able to cover allowances. After that, we'll be moving to purchase. After this, whatever has been taught to you, is it clear to you or you have some specific query?
Clear, sir.
Clear? Thank you very much.